Most traders don't want to wait around for a month or two to cash in on their options trades, but the fact is that most options income trades last weeks, if not months. I'm the head trader of S&B Capital's options trading desk here in Manhattan, and the traders on our options desk are aware of trading strategies that can be wrapped up in a single trading session, one day, in the right conditions. The good news is that we're in a situation right now with market volatility so high that one-day situations like the ones we're about to show you are literally everywhere in the market if you know how to set them up properly. So if you're interested in a high probability one-day trade that's easy to understand, then stick around, because I think you're going to be surprised at how easy this trade is to understand and construct. Hi, I'm Seth Freuberg, and I'm the head trader of S&B Capital's options trading desk here in Manhattan. S&B Capital is a proprietary trading firm located in Midtown Manhattan, and we provide capital for options and equity traders from all over the world, trading both remotely and in our offices here in New York City. Now, I'd like to suggest that you click on our subscribe button right now so that you don't miss any of our free trading videos that we produce for traders and investors all over the world. They're really very valuable. Okay, so as this fascinating market year continues to unfold, and the market has now bounced strongly from its initial crash in March, and now over the last month or so, the SPX index, which tracks the prices of the S&P 500 stocks, seems to have, at least for now, stabilized in the 3,000 to 3,200 range. And so we find ourselves in a good spot because options pricing is still high, reflecting the potential at any time of big market moves, as we've seen over the last 3 months. So as you probably know, it's a practice of certain traders to establish daily support and resistance levels for the SPX index based on the price action of the overnight futures contracts tied to the SPX index, with the idea that once the market opens, if the index hits an initial support zone, buyers will step in and scoop up perceived bargains on stocks that they believe are selling too cheaply. And that, on the other hand, if the market runs into an initial resistance zone, the likelihood is that sellers will step in thinking that stocks have gotten overheated and they want to cash in on their gains before the rest of the market realizes it. Now, of course, there's no guarantee that any of this will play out that way, but experienced traders know that there's a decent chance that the market will reverse around these two zones and that option strategies can take advantage of that phenomenon. So here's a recent example of what I mean. So the SPX index has closed at 31.24 the day before, and based on the price action of the E-mini futures contracts, the trader had established pre-market zones of 31.50 to 31.60 as the resistance level and 3100 to 3110 as the support. Based on this, a trader could have entered into an options trade to leverage his understanding of options in light of the position of his support and resistance zones for that day. Now, before we get into that, we need to make sure that everyone watching this video understands how index options work. If you're already experienced with index options, this will be quick, so just please hang in there and we'll jump right back into the key points of the lesson in a minute. Okay, so now almost all of you are probably familiar with equity options, where a call buys you the right to buy 100 shares of a stock at the strike price of that option anytime before the option expires, and a put option entitles you to sell 100 shares at the strike price of the put before that option expires. But there are also index options, which work similarly to equity options, except there's no such thing as 100 shares of an index like the S&P 500. You can't really buy or sell 100 shares of an index, but what you can do is get paid in cash, $100 per point, if the index expires above the strike price of an index call that you buy, or alternatively, you'd be paid $100 per point for each point the index drops below the strike price of your index put. So, for example, if an index is trading at 1400 and you buy the 1410 call, if the index goes to 1415, you'd receive $500 in your account. If the index closes at 1410 or lower, your call expires worthless. On the other side of the ledger, if you buy a 1385 put and the market sells off to 1375, you'd make $1,000. But if the market just sold off to 1385 or higher, the put would expire worthless. So those are the basics of index options. And remember, you can buy options, but your broker will also allow you to sell options as well. And your broker will allow you to put together combinations of options. In other words, option strategies that involve both short and long options purchased in a way that is advantageous to you as a trader. Okay, so back to the initial trade itself. Once having established your support and resistance zones, a trader could have opened up an options chain for options that are going to expire at the end of that very trading day, which in this case was June 16th. So what the trader could have done was to build what is known as an iron condor trade around the support and resistance zone. We'll explain what's going on here in a minute, but what the trader has done in this case is to sell a short call up at 31.55, which was the center of his resistance zone, and then buy a protective call 25 points above that at 31.80. Then he heads down to the downside of the market and sells a put at 31.05, again, right in the middle of his support zone. And then 25 points down from that point, he buys a protective put at the 30.80 strike price. Putting this all together, all four of these legs are known as an iron condor. So let's first understand what's happening here from a cash flow perspective, and then we'll see how the trade actually pans out and why. So remember, the trader bought the 31.80 call as protection for $2.82. And remember, each point beyond the strike price of the option is worth $100. So we multiply that cost by 100. So that represents a total cost of $282. Then we sold the 31.55 call for $8.94 times 100 again, as we explained. So that represents cash received in our account of $8.94. Similarly, we sold that put at 31.05, as you can see, which brought in $7.16, and we bought the protective 30.80 put for a total cash outlay of $315, which, when you net it all out, creates a cash inflow into our account of $1,013. Now, for reasons we can get into in another video, the total risk on this trade is $1,487, and that's how much your broker would have required you to set aside in your account to make this trade.
I wanted to let you know that there really are sound, viable, long-term techniques for trading options for income. And in fact, we're currently running a 2-hour free intensive workshop at the moment where we'll be teaching you 3 of those strategies that real professional options traders use, including a really simple but incredibly effective technique that some of the greatest investors in the world, like Warren Buffett, use all the time, plus an options trading strategy that has a statistical 80% probability of profit month in and month out, plus an option strategy that you can employ with a stock that you like, where you'll make your target profit whether the stock goes up, goes nowhere, or even goes down a small percentage. So if those strategies would be of interest to you, then you should check out the free options class that we're currently running. Just go ahead and click the link that should be appearing now at the top right corner of your screen. That will open the free registration page in a new window, so don't worry, you won't lose this video. Or you can just head on over to optionsclass.com to register for this free intensive workshop. It's a rare opportunity for retail traders and investors to learn directly from Wall Street traders, but that's exactly what you'll be getting through this free online workshop. So click the link to sign up now and don't miss it.
Okay, so now let's move forward to the end of that day. And as you can see, the SPX index closed at 31.13, but more importantly, during the day, the initial support and resistance levels that we focused on at the beginning of the day held. You'll see midday there that when the market rallied up above 31.40, sellers started to emerge about 10 points before the market actually hit our initial resistance zone, and then they pulled the market down pretty much to the end of the day, all the way down to our support zone at 3100, 3110. But then at the end of the day, there was a slight bounce, and the market pushed back out of our support zone and closed at 3113, which is above our initial support zone level for the day. Now, the fact that the market closed between our support and initial resistance areas is huge for this options trade. Why do I say that? Well, let's remember that at the end of this day, all 4 of these options expire, because these options expire today. They stop trading at 4 p.m. and then they're valued. And if any of the options are in the money, meaning the market closed beyond the strike price of that option, well, the buyer of that option gets to collect cash for that option, and the seller of that option is required to pay that cash. So let's take a look at each option and determine its value at the end of the day. Well, the 31.80 call that we bought was 67 points above the closing price of 31.13. And remember, there's no payment to us as the owner of the call unless the index closes above the strike price of our call, which in this case is 31.80. Well, the index is 67 points below our strike price, so that option we bought has no value at expiration. And the same is true for the call we sold at 31.55. That's 42 points above closing price, so that one expires worthless as well. And remember now, puts only respond if the market gets below the strike price of those puts. And as you can see, both the put we sold and the put we bought, both of those also have no value because those closed below the market. And so therefore, all 4 options expired worthless, and no one owes anyone any money. There's no settlement value to any of the options, so the cash you received at the beginning, that initial cash flow you get to keep. In other words, that's your profit. Now remember, the risk that we took on this trade was $1,487. And so the return on that trade is 68%, which is really very attractive on a one-day trade that was set up in a very logical way. So the important takeaway from today's video is that traders for a prop firm like ours are exposed to a variety of disciplines, including the technical analysis skills necessary to establish logical initial daily support and resistance levels, and the options knowledge to be able to design trades that leverage the power of options to cash in on an edge that a lot of other types of traders might have missed on a typical trading day. You can develop those same skills as an independent options trader with some practice and some knowledge if you're willing to put in the work to study the markets and the many opportunities that options trades are designed to profit from.
Now, just to remind you, as I said earlier, if you enjoyed this video and learned something valuable from it, would like to learn the details of 3 real-world option strategies that professional options traders use all the time, then you should check out the free options class that we're currently running. Just go ahead and click the link that should be appearing now at the top right corner of your screen. That will open the free registration page in a new window so you won't lose this video. Don't worry. Or you can just head on over to optionsclass.com to register for this free intensive workshop. It really is a rare opportunity for retail traders and investors to learn directly from Wall Street traders, but that's exactly what you'll be getting through this free online workshop. So click the link to sign up now and don't miss it. And please don't forget to click on the subscribe button right now so you won't miss free trading videos that we're posting constantly on our channel to help you to improve your game as an options trader.